Today's show focuses on a review of key topics that we thought were important but not covered by most of the pundits during the review of Tesla's earnings on the 22nd of July, 2020. This is Greg for Teslafaninsight. Thanks once again for joining us. Wanted to thank our Patreon supporters as well as our subscribers. If you enjoy the show, please take time to like and subscribe. So we had exciting news yesterday. As you all know, Tesla came out with fourth quarter profit. There was some argument against the profit because 400 million of that was actually EV credits, which was money that actually is coming from manufacturers who are not meeting their goals relative to EVs and therefore had to pay Tesla cash in order to get the right to pollute with their large vehicles. GM and Fiat Chrysler have been the primary sources of funds, but we're expecting this number to get bigger next year with the addition of monies coming from big entities in Europe, the big three that have been unable to get high levels of sales of EVs to sort of mask the impact of their large SUVs. So what I wanted to review today is perhaps 4 points. There's super profitable conversation by Elon Musk, 800 million on the balance sheet as a second item. I want to call it de facto China control of Tesla. That's been coming up a lot among our viewers. And finally, Elon body language. So one of the things I think is interesting is we actually, perhaps a year ago, we would get a notice once a month from a different person, and the request that they would make is why it is that we don't actually cover the same thing that everybody else covers, and we should simply acquiesce and start doing that. And I pointed out to him that there's one little problem with that, which is if you're already getting that information from other organizations, why would you watch our show? Hence, we tend to look at things slightly differently than most people do, and hopefully we're giving you a perspective that you may not be getting that enhances your knowledge. So the first example of that today is that Elon pointed out that not super profitable was their goal. I think this is a huge point that he made because there's a thing going on right now between Tesla and competitors. What that thing is that a battery pack for approximately 300 miles of range, well, in the case of competitors, for 200 miles of range, that battery pack is costing them approximately $40,000. So Tesla selling their vehicles at $40,000 means that they put a lot of competitive pressure on other firms, because by the time they put something around that battery, a viable vehicle is at $60,000, maybe $70,000, if not double that in the case of VW. I was also intrigued by this comment because there's some history going back for Elon on this. It's this very topic that resulted in Elon actually becoming the CEO of Tesla. He described the fact that they actually had another CEO in position, and they ran into a problem because he was building a car that was going to end up costing between $100,000 and $200,000, but he actually didn't bother to tell Elon what he was doing. And when Elon found out what was happening, he elected to, fire the CEO and replace him with himself, even though he was already running SpaceX and did not want the job. And so I'm really impressed that he's mindful of the fact that there are people with lower dollars, slower dollars, that are interested in buying the car. And as this car, the lower the price is, closing in on $30,000, the higher the count of people who can fit that in their budget, and therefore the higher sales Tesla would have, etc., adoption rates increase, etc. I'm really impressed by the fact that even though he doesn't have an MBA, etc., the core logic he operates from in terms of consumer needs, particularly on price, is really impressive. I was fascinated because Steve Wesley, a former board member of Tesla, and a whole bunch of other folks have warned about the China threat. And right now, there are plenty of Chinese vehicles in the 20 or 15,000 and below price point. The key to it is when you look at the performance parameters, and especially combined with the range capabilities of Tesla vehicles, that blend of capabilities causes consumers in China to aggressively go for Tesla when there are a lot of options out there, including domestic ones that might actually be cheaper. And clearly, one of the big issues for China is that for those $15,000 or $20,000 vehicles, they're still operating with 135 miles of range. And what everybody knows is that that kind of range gets adoption for about 25% of the population. But when you offer 300 miles of range, you're now getting adoption from as much as 75% of the population. So, Tesla sort of stays ahead here. And the fact that Elon is really focused on it, I think is pretty impressive. And a lot of the fact that he could afford any Tesla he wants, and he could actually afford to only focus on the high end, but has an eye peeled for this. The second note that we wanted to look at is $800 million in cash that came up this quarter, or that was added to the balance sheet during the quarter, raising the total cash in hand for Tesla to $8 billion. Now, I was kind of surprised to see that number. I expected that there would be expansion techniques or costs related to expanding to prepare for the semi, or other costs that would start to sap the cash that the company was adding to the balance sheet. This is going to be a very interesting situation because there's a conversation going on between different entities about how to fund Tesla's future. Number one, there's this issue of $10 billion plus in debt that Tesla has. Number two, there's an issue of a really high stock price that could retire that debt quickly, diluting shares a bit, but it would make it a debt-free company. There's another issue that's going on of the fact that between the semi-truck and the Cybertruck and some of the other plants that they have planned over the next few years, there's this competition for dollars related to how to grow that I think is really interesting. So what it suggests is if Tesla is adding, in theory, $800 million a quarter to the balance sheet, as Elon said, theoretically, they could actually do internal funding, which would not need for them to issue more debt. And the servicing of the current debt is not a big deal, given that they got all that cash on the balance sheet. It makes sense kind of what they're doing. I would argue it makes a lot more sense to retire that debt, reducing our overall costs by issuing more shares, or refining the debt into lower interest rates. Now that you're a stronger company, the terms of the debt, instead of convertibles, etc., would be better. So I thought that was interesting. One of the other things that many people were asking me about was what's going on with Elon and the split of the stock. The lower the stock price is, the more people that can afford to purchase the stock, so you kind of expand the base. I think that the logic of a split is excellent and totally makes sense. I have seen nothing, in terms of moves being made by Tesla to address this in any substantive way. And if I were to guess at what's going on, I believe that Elon's having a battle with the Google guys regarding who has the highest stock price. Tesla is just eking out above Google at this point. And I think based on watching Elon, I feel like there's an entertainment component associated with the high stock price. And so I'm hoping he splits because I could buy him more, but I highly doubt that they end up doing it before the S&P, and it might happen afterwards, but it just doesn't seem to be a priority for the company. But I think a lot of people would be thrilled, including myself, if it did occur. The third thing that we wanted to review today is just the fact that there's a lot of sort of business axioms that I've learned, understand, and come to really appreciate. And one of them is, for example, whoever raises the money to build or do a company, that's the de facto CEO. So, for example, with Nikola, Mr. Milton isn't the CEO, but he raised the money, he put the company together for all intents and purposes, he's the CEO, even if he isn't wearing the title. I kind of bring this up because something interesting has happened, which is what I call the de facto control of Tesla from China. So whoever's producing the most efficiently, the most profit, et cetera, even if it's not stated, they become sort of the big dogs on the block. So it'll be interesting. It'll be nice to see Germany as well as the U.S. other plants come online, because China is playing such a central role with the Shanghai production facility that we'd love to not see it, get overused. But we also have to recognize that there's a real power there that's an engine for the company that's pretty important. And hopefully there's a nice counterweight with other facilities being opened over time. But the size of the Chinese market and also the size of the plant, the original plan was to have a small factory like Shanghai in 5 different provinces in China, so you could have more localized delivery of vehicles. But that was a logical move that was, at the start. But there's a way in which the port facility location of the Shanghai spot is so good in terms of raw materials in, perhaps cars out if you need, or even if you wanted to ship cars on water instead of rail to destinations within China, that Shanghai location is phenomenal. And so it looks, based on the size, the doubling in size of the square footage, that there's not only vertical integration going on to add more pieces of the car in one building versus having to ship it in. You're also seeing the possibility that there's a rethink to suggest that perhaps a very, very large facility might be better in smaller numbers than having more small facilities. So bottom line here is that, Tesla Shanghai was a source of the miracle that we're seeing when it comes to Tesla's recent earnings. And then it sort of seems to continue. The final sort of look that I wanted to review is companies in Silicon Valley run a little bit differently than companies in other parts of the world. The reason is that many of the people who run those companies are actually fairly young, and they're really good scientists or engineers, but they're not necessarily steeped in corporate culture in terms of how process works. So I thought it was one of the process elements that I find fascinating is sort of a process of watching Elon, where he is and what he does. And what does that tell you about how and where the company's at? And the one thing I wanted to highlight here is point number 4 for us is Elon's body language relative to the numbers and production for the quarter. So if you'll recall, in previous quarters where the production count and delivery was an issue, Elon and his mom showed up in Fremont and started delivering cars and interacting with the company on a very intensive basis. In this current quarter, what you noticed is that Elon had a thing going where he didn't show up at the end of the quarter because he already knew the numbers were in the bag. And he also didn't show up at the end of the quarter because not only were the production numbers in the bag, but the earnings numbers were in the bag as well. So those of you who want to make money on Tesla and are serious about it over time, I wanted to encourage you to look at this, because Elon likes the difficulty of being a firefighter within the company, meaning he will roll in and help put out fires that might show up that other people, he might not trust them to, or he feels like he wants to gather data and make the decision on how they're going to solve the problem. When there is a problem to be solved, the jet lands and he sleeps on the couch and addresses it in Fremont. When there's no problem to be solved, he's focused on SpaceX and all the elements of how SpaceX is working currently. So I wanted to review this with you because after a while you start to get a feel for how things work. And I think the overhang for all the numbers, earnings, and production has been the absence of Elon, and the fact that his absence really highlights the fact that there's extreme confidence that everything is working fine, and I can focus on other major tasks and not have to deal with what's going on at the plant currently. So I thought these were interesting points. Obviously, there's a profit, which is good. Obviously, there's a nice block of cash still coming in from the EV, from other entities' operations. And it's interesting because Tesla, instead of using it to increase the amount of profit, they're actually decreasing their prices so they stay within a certain range for overall profit margin. And by keeping the cost lower on vehicles, we're potentially each increasing sales and solidifying the company as the global leader that it is. So we look forward to keeping you apprised of more things that we've gleaned. Right now, we're kind of a waiting period as we head to S&P announcement, and we look forward to a bunch of firms preparing for this in terms of acquiring shares, be well positioned as this decision is made soon. And so I'd say that it'll be a tough period. Watching the stock move sideways, perhaps not a lot up, but I think the wait will be worth it. Just want to remind you of our health tips. 25 legless a day. Try to a 5-2 or other diet that might help in mental capabilities over time from fasting. Number 3 is maybe a half-hour walk a day, at least a 30 SPF or better if you're out in the sun. And we also wanted to encourage you to consider a couple of times a week weightlifting as a way to increase bone density. At any rate, this is Greg for Teslafaninsight. Tschüss, German, au revoir, French, Lihitrot, Hebrew, Hoda, Hafez, Farsi, Hey Do, Swedish, Strasvice, Russian, Ni Hao Ma, Chinese. And in Jamaica, we say, enough respect, walk good. Also want to remind you, we are putting together a group to acquire SpaceX shares and sort of have access to some. If there's interest, please drop us a note under here, and we'll walk you through the process. Just a comment under the show, and then we'll go through a process. Have a great day. Thanks, and bye for now.